Welcome back. Let's catch you up on a couple stories that should be on your radar today. It's Rapid Fire, and here with their takes on the headlines, Contessa Brewer, Bill Griffith, and Seema Modi. Great to have you all on board. First up, more evidence that China's economy is slowing down. Industrial production growth in China hitting a 17.5-year low overnight. This comes as the Cass Freight Index for the U.S. reports that August shipping data fell year on year for the 9th straight month. Are these dots connected, guys? Seems like they are screaming, yeah, China's slowdown is really crimping the U.S.
Yeah, the data is certainly showing that effect. And what's interesting is that unlike here in the U.S., where we're seeing a divergence in the data, weak manufacturing but strong consumer, in China, it's quite the opposite, where you're seeing the softness in industrial production and manufacturing now start to bleed through to the consumer. And that's why we did see that slowdown in Chinese retail sales. That's certainly going to be a concern as earnings season kicks off in another 2 weeks, where companies like Nike and Starbucks will likely be in focus to see how strong is the Chinese consumer, despite the data saying that things aren't going that well.
And I mean, it's going to be hard, I guess, to tease it out, cause and effect wise, but it seems like the trade war is having a definite impact.
Oh, absolutely. And, this unique hybrid they have going of communist government with capitalist economy, one thing that the centralized government cannot control is the consumer.
They try.
Well,
they have other ways. They can surveil them. They can track them.
Well, so do we, from that standpoint. But they can't do away with the business cycle, and they're just suffering from that. The law of large numbers kicking in, all those things going on right now. And yes, they are definitely being hit by the tariffs in this trade war.
And I think you can look at the sectors too. I'm new. You know what I think? I think when you look at casinos, which I follow closely, factory owners are the ones who are these VIP gamblers. And so when you see a slowdown in industrial output and exports, who does it hurt? It hurts the guys that own the factories. And that's why there's some consternation on the part of these casinos about whether that's driving some of the slowness in VIP growth. If you look at real estate in New York, if you have luxury apartments sitting on the market and not selling, is it because our foreign buyers have evaporated? If you look at tourism, and I know you're following this, Seema, as well, the Chinese are not coming to America the way they were for the previous decade.
It's a problem for
colleges.
It
hurts a lot of people.
And by the way, I mean, we talk a lot about the ghost towns that China has built over the last decade. New York luxury real estate is starting to be a little bit of a ghost town of its own. Great takeout of the Times on that over the weekend. But let's talk some Uber and Lyft, shall we? They are up today. They're rising in the session after HSBC upgraded the stocks to a buy. They're saying the companies are making moves towards profitable growth and lower costs. They're also saying that regulatory risks should be largely priced in now. You can see Uber up about 3.5%. It's just over 34 today. Meanwhile, WeWork, another company with a long-anticipated IPO, getting major support from a SoftBank plan to buy at least $750 million worth of shares. You don't want to say they're propping up the IPO, but the news flow hasn't been that great.
Well, they own $10 billion of the private offering to begin with, so they are already very, very deep in this thing. And if they want this IPO to come off, they've got to pony up some more money, so they're going to have to put something together.
And as Leslie made the point last week, Uber's probably glad that it went before WeWork, Uber and Lyft, as opposed to after, because they've had enough of a struggle as it is, but I was
speaking to one friend who knows Masayoshi Son very well, and I asked him if this will change SoftBank's investment style, perhaps become a bit more conservative given the underperformance of Uber and also the repricing of WeWork's valuation. He said, absolutely not. If anything, Masayoshi Son is going to double down. If you look at his history, I mean, this is a man who was at one point almost bankrupt, but then took a big bet on Yahoo and then Alibaba. So if anything, he's going to really try to make sure
if he wants to be the cowboy and do that is great. And he has done, I mean, it's been amazing to watch everything he's pulled off. But I wonder about the impact on Silicon Valley, because all of these valuations driven by his vision, pun intended, are having ripple effects where what they're able to come out with in public markets is way different.
Don't forget, Goldman Sachs put out that report last week, the analysis that showed that it's not necessarily whether you have near-term profitability that gauges the success of these companies. It's what their sales do over the first 3 years. And all three of these companies are showing significant year-over-year sales growth.
And that's the question, is if they can keep that going. That goes back to the upgrade this morning, Bill. They say at some point, does it all get priced in? And people are reminded of why they like these companies.
I don't know how you can price it in when you don't even know what the regulations are going to be yet.
Right.
I mean, they've just begun this process right now. See California legislature.
Exactly. And speaking of regulation, a new op-ed in the New York Times says the backlash against big tech has been greatly exaggerated. It says despite the threat of regulation, fines being imposed, a more critical press, and users threatening to quit all the time. Big tech and their products have never been more popular.
Who's positing a backlash?
I think there is a bit of a backlash emotionally, but we can't let go of these things. You know,
I can't quit you.
Sunday morning, 9 o'clock, you get your report card of what your usage was the previous week. Mine was down 45%, and I cheered.
This is for your screen time on your phone?
Yes, exactly.
Is that because you're actively trying to stay off your device?
No, I'm not. That's the thing.
His wife has set limits on him.
I hate myself for spending as much time on the screen as I do, and right now it's about 3.5 hours a day, which I find abhorrent, you know. But I am watching old movies in some cases, you know. But I think, you know, we have the same relationship with food. You know, you go to the cafeteria and you see somebody walk out with a really nice, you know, meal, and you say, oh, man, that's too much. You know, I couldn't eat all that. You know, we have this love-hate relationship with food as well, just as we do with technology.
Tech is not a nice to have. It's become essential. Communication is not,
and we hate that
nice
it's
to have.
essential
It's a
now,
must-have, right? And so despite the pushback from politicians and all the regulatory concerns, and these tech products certainly aren't perfect. Some of them are spying on us, but still, we use them.
Listen, when I can't pry the iPhone out of my grandmother's hands, there's no tech backlash. This is all some made-up premise to write an op-ed about.
Well, but I'll tell you what it's really about is regulation. So the antitrust law currently has to show consumer harm, especially usually it comes down to price, right? You know, monopolies, they raise price, bad for the consumer. If they cannot demonstrate that there is consumer harm in this case, they are literally going to have to rewrite the antitrust law to go after these companies in a different way.
That's smart.
And I think that's what it all comes down to. That's why it matters how much screen time you're doing as of late.
Absolutely. Get it out of my hands, would you?
By the way, I'm still under 2 hours, but it's creeping.
Ooh.
It's going.
Yeah, now that you've come back to social media, that baby's going up.
Way up.
Be careful.
Thank you, guys. Appreciate it. Contessa Brewer, Bill Griffith, and Seema Modi. Finally, I'm sorry, there's a whole other story that we haven't finished yet.
Sit back down.
New data released by a Chinese e-commerce firm and authorized Apple reseller says nearly 2/3 of Chinese pre-orders for the new line of iPhones were for the cheaper iPhone 11. The success of the phone in China extremely important to Apple. Check out these numbers. In the second quarter of 2019, shipments dropped 14% year on year, and Apple's market share fell from where you see on the left 6.4% to just 5.8%. So is it still good that, you know, hey, there's healthy demand for this new product, or is it, hey, we needed this to be strong demand for the most expensive product?
You know, Apple's breaking it down in a way that makes it seem very affordable. If you're willing to trade in your new phone, you can get it for starting $399. But here's what got me. The wait times for the 64 gig and the 128 gig are stretching to October. Who has not learned by this point that 64 gigs, especially with a brand new awesome camera that takes up so much data, 64 gigs is not enough.
I think I'm in the cloud, though. I think doesn't the cloud with the photos help you kind of get around a lot of that?
Yeah.
Have you heard of the cloud?
How
about your grandmother? Does she have 64 gigs? Or
no, I got her the big phone.
But you know what's also interesting about this? It goes back to what Seema was saying off the top, which is China's slowdown spreading from an industrial one to a consumer one. And the anecdotes about iPhone demand probably speak to that.
Well, in this type of environment, I think it goes to show how pricing is very important. So if you bring the price down, especially for a consumer in a lot of these emerging markets, which tend to be a bit more price conscious, it certainly can work. And this is why Apple has failed in some of the other emerging markets like Philippines and India, where there are other competitors like Xiaomi and Samsung that offer similar devices at a much more affordable price point.
And this is the new Apple. To be price conscious, you get them in the door and they become part of the Apple ecosystem, and then they get into the services at that point.
But at what cost to margins, I guess?
Well, the margins on the hardware are going to be one thing, but if they can be made up for on the services side, then you've found success here. You've found a good business model.
With that kind of market share, they have some tough sledding.
Yeah, that's for sure in China. But they're finding good high demand at lower prices. What a surprise.
What a shock.
Right?
And now we're done. Thank you all.
You sure?
I'm pretty sure this time. Contessa Brewer, Bill Griffith, and Seema Modi.